What's up, everybody? Welcome to another video of Ted's Financials. And today I'm going to be talking about SBA loans. What is an SBA loan? The two main types of SBA loans, and how can you qualify for an SBA loan? Now, an SBA loan, SBA means Small Business Administration, and that is like a government entity. Now, SBA doesn't necessarily lend money on its own, but SBA usually partners with banks or other lenders to lend money to individuals and businesses that will not qualify for traditional business loans at a big bank. So, say for an example, you have a business, but your credit score is not that great. You don't make that much money. You may have a little bit too much debt, and you may have been in business for at least 1 year. Most banks will turn you down before you even send your paperwork in. But they will refer you to an SBA to get you an SBA loan. Now, there are two main types of SBA loans. There are many more, but the most common ones are SBA 7A loan, which is you use that for general purposes in your business. So say you need it for equipment, working capital, or you might need it for reserves, line of credit. That's what an SBA 7A loan is. Now, there's also the SBA 504 loan. The SBA 504 loan is only for real estate and equipment purposes only. Now, what does it take to qualify for an SBA loan? So SBA loans, number one, they require you to have a lower credit score than a traditional bank. So I gave you guys an example in the last video when I was talking about just business loans in general. Most banks want you to have at least probably 640 and up credit score. Some banks I personally know have 680, and some are just outrageous at around 720. SBA loans, they are a little more lenient with you. They will work with you if you have at least a 620 and up. Now, there may be banks and lenders out there who can help you get an SBA loan for even lower than 620 credit score. It just depends on the lender and the institution that the SBA is partnered with. Because like I said before, SBA, the Small Business Administration, they do not lend money to you on their own. They just partner with other lenders and other banks to get you financing. But the difference is with an SBA loan, the government guarantees half of that loan, while the bank or other lenders guarantee another portion of it. So keep that in mind. The Small Business Administration does not lend money on their own. They just partner with other people and other banks to get you that financing. So I got to make that clear. Now, with an SBA loan, we just went over the credit score, but you also need to make sure, man, you at least been in business for 1 year. Now, most banks, as I said in the previous video, they want you to be in business 2 to 3 years. SBA loans, they will work with you if you've been in business for 1 year. I know that for a fact. 1 year. You just need to be able to provide them with your personal tax returns and your business tax returns so that you can show a paper trail that you've been doing this for a year. Now that we got that on the table, you also need to make sure you got a little bit of collateral. Because just because this is the government They still need to protect themselves just like the bank. Now, they are not too strict on collateral like a bank is, but to be on the safe side, you need to make sure you come to the table with some type of collateral. You know, rather that be the real estate, you own some real estate, rather that be you own some equipment, you need to have some type of collateral that shows if you default on this loan, something happens, you can cover it, you know, with this collateral that you got. So yes, SBAs, they focus on collateral, you know, as well, but they're just not as strict on it as a bank. Another thing that you need to focus on with SBA loans, your financial statements. Because with SBA loans, they will take longer to approve you than a traditional business loan. It takes a while, man. It doesn't take too long, like a year or whatever, but it does take a while to approve you for an SBA loan as opposed to approving you for a traditional business loan. So you need to make sure you have your paperwork in order. So you need to have your financial statements. As I said a few minutes ago, personal tax returns and business tax returns. You also need your balance sheet. Always need your balance sheet to show your assets and liabilities in your company. You also need your profit and loss statement. What's your profit and what's your loss for the year? You also need to be able to provide your articles of incorporation, your paperwork just showing that this business is legally established to do business in this state. You also need to be able to show all the owners in the business. Are you the sole owner? Are you the 100% owner? Or do you own 50%? Do you own 40%? But they would require you to have paperwork on all owners, especially owners who have 20% or more ownership stake in the company. So make sure your paperwork is in order when you're doing an SBA loan, because it will take quite a long time to get the deal approved. So you just make sure you got everything ready on your end so these people can hurry up and get this done. And another important thing with SBA loans, and please do not forget this. Once again, man, your debt service coverage ratio. How much debt do you have, personally and business? Do you make enough money to be able to repay this loan without all of your other debt getting in the way to where you can't pay off this loan? Everybody looks at that debt service coverage ratio. The good thing about SBA, they are more lenient on your debt service coverage ratio. So let's say, for an example, like I said in the last video, most banks require you to have 1.25 to 1.50 debt service coverage ratio. I also would like to make a correction. In the last video, I said if you at 2.0 and above debt service coverage ratio, that's bad. I apologize. You know, I made a mistake there. Actually, the higher your debt service coverage ratio, the better, because that means that you don't have that much debt. The lower your debt service coverage ratio, let's say if you are below 1.0, then that means you have way too much debt than more money that you make every year. You have more debt than income, basically. So while most banks may require you to have a 1.25 to a 1.5 debt service coverage ratio, SBA may accept you with a 1.1 debt service coverage ratio. So that's something to pay attention to, always. But those are just the general requirements that you need for an SBA loan. You know, I could go further into detail regarding other things that you need, But man, this is an elementary channel, so we just giving you the basic fundamentals right now. But those are the two most popular types of SBA loans, the SBA 7A and the SBA 504. And also make sure, last but not least, make sure you can prove the purpose for the loan. Lenders will disqualify you and deny you at the snap of a finger if you can't explain to them why you need this loan. Because if you have no purpose for the loan, if you just want to get some money just to get it, nobody would trust you with the money. These people will deny you at the snap of a finger. So make sure you also have paperwork showing proof that you're going to use these funds for this specific purpose. If it's real estate, if you're trying to own the real estate, buy this building, show that. If you need this piece of equipment, show that. But you need to be able to explain and describe on paper the purpose that you need this loan for. But those are the most important things that you need with the SBA loans. Keep doing your homework, continue to do your research. I'm dropping more videos explaining the lending process of both traditional business loans and SBA loans because I work with them both. But this is just general information, man. But y'all stay focused, stay blessed, keep grinding, and go get it.